Okay, everybody, welcome to tonight's Trade Essentials webinar. This is week 3. Glad to have all of you here. If you happen to miss weeks 1 and 2, all right, we have those out. We've actually emailed those out to everyone who registered. But if any of you that are that didn't register in the first week or two, and you registered tonight, and you're wondering what am I doing in the middle of week 3, it's fine. We've got copies of that for you. And Jay, if you could just put our channel up there, our YouTube channel, that is www.youtube.com/Tom's Trading Room. All right, if you could put that out there on the chat box, that would be fantastic. This is week 3. In week 1, if you recall, we talked about option strategies, overall options. We also talked about call and put essentials, all about calls, all about puts. And last week, we did a review of week 1. We talked also about spreads, and we ventured into the dark net. What is the dark net? The dark net is our proprietary trading strategy that involves swing trading, very much like Elliott Wave. I like to call it Elliott Wave without having to do the counts. And I want to thank a lot of you that emailed into our support email and said how much you really enjoyed the darknet trading strategy. You've been playing around with it. It has been, and I believe it will continue to be, a very profitable trading strategy. We're going to look at it. As a review. Got a lot I want to cover with you today. A couple housekeeping rules before we begin. Number 1, the session's being recorded. As soon as the recording is over and we have converted it and uploaded it, I will make sure that all of you in here get a copy of that week 3. Also, I want to make sure that you realize that there's a lot of people in this room tonight. All right. It's one of those welcome back things. I'm glad to be talking and sharing this knowledge with all of you. If you have questions, you can submit them in the Q&A box there, and we will try to answer as many of them as possible. I'll say this right now. There's no way I'm going to be able to ask and answer every single question live here. We're going to do our best. Jay's going to be able to get to you on some of the more specific questions you might have regarding maybe it is a past webinar, maybe it has to do with the software, whatever that is, we can handle that for you. But if you have specific questions on what we're talking about tonight, I'm going to try to answer as many of them as I possibly can. Finally, the disclaimer you see in front of you here. So just keep in mind that you can read this from beginning to end in the recorded webinar that I'll be sending to you. But a couple of pieces that I want to point out. Number 1, obviously stock and option trading has large potential rewards, but also large potential risk. All right. Number 2 is that myself, Jay, and everybody that's associated with Tom's Trading Room, we are here as your educators. All right. We're not specific investment advisors. We do not give trading advice. All right. Specific trading advice. You need a broker to trade with. You must meet certain requirements. And everything we're going to talk about tonight is in US dollars unless noted otherwise. All right. Ready to get started? Let's go. So, for those of you that have are joining us today that are wondering what is going on with the Optionetics website, well, we have hijacked it. We've temporarily hijacked it because we're in the middle of making some changes. So right now, if you go to optionetics.com, you're going to get pointed toward this beautiful picture right here. And here you've got a couple of different areas you can go to if you're new to us, if you're a returning Optionetics student, if you were a platinum user. Also, you've got Tom's option tools over here. And then, of course, a little bit about me. Now, to this week's webinar agenda. If you remember last week, we talked about stock selection, creating a best stock list, and all about options. We also showed you how to, look for the beginnings of looking for reasons to get long or get short the markets. All right, I remember we talked about something called the high-low. We used the high-low strategy right off of our tools. And that has actually produced some very good trading opportunities. And I'm going to share some of that with you here in our review. Last week, we did a review of week 1. We talked about channel collisions, all about spreads, and also what we call trading with the darknet strategy. Today, I'm going to do a review of that darknet strategy and spreads we got some more case studies to share with you. And also, I want to talk about trading with a money calendar, which is, for those of you who have never seen this before, this is an application that myself and some of my fantastic programmers have put together. It is, I think it's one of the coolest things we've ever come up with. All right. And very few people know about this very few when you look at the investing world. We'll get into that as well. So got a lot to cover here in the next hour to hour and a half. Let's talk about our review. So we're going to do what's called Outlook review and homework. So Outlook, we'll do an outlook of the markets. Also, I want to do a review on option spreads. And you know what we're going to do? We had a signal that came up on Priceline, and that came up Monday morning. So what I want to do is I want to go and I want to look at that, and we're going to use that as our spread review, because that's an excellent, excellent example of why you want to do spreads. All right. We'll also review some darknet signals for the week. And then we've got case studies to date. And then, of course, then we'll get into what I want to talk about tonight. So this is what we're going to cover for now. So let's start with a market outlook. And this time what I want to do is I'm going to show you in our market outlook where we post this. For those of you that are part of our contrarian, you get our contrarian trading software or a complete trader software. All right. That is anything that's darknet or higher. And so to do that, what we're going to do is we're going to take a little trip to the software. And in either one of these two, contrarian trader or complete trader, you have access to the newsletter. So if you were to click on the newsletter, you're going to come up to our trade alerts. And this will show you every past newsletter that we've ever done. All right. Also, if you notice here, what I like to do is I like to first start out with a little bit of what I see happening in the market over the last week. All right. We're actually talking about sector spiders this week. And so if you notice here, this is our outlook. And rather than me go through and show it to you on the computer, I have it drawn up on the newsletter here. And so you can see with the S&P, we have got two areas of resistance at 240 and 242. And I like to always say that resistance a lot of times becomes support. And we're gaining some very interesting support levels right up here around 242. And so I like that as a support level. If we drop below that, I would get a little bit nervous. I do not believe that we're going to see anything significantly lower until we get through the 4th of July. All right, because we're going into a week. Now, this week, we could see some tests to the 242, maybe even the 240 support, because we are still in a bit of a what I like to call the shaky zone. Then we jump into the last week of June and things start to look a little brighter. Now, how do I know all this? I'm going to show you that later on in this program. I'm going to show you exactly where I'm getting all that data from. All right, but this is our S&P, and healthcare is at new all-time highs. But again, the oil and energy sector is to blame for why the Dow and S&P have not really continued to move to these new highs. But guess what? This should be no surprise to those of you that were here last week and the week before, as we were looking at oil stocks like Schlumberger, which has been slumbering lower and lower. We'll get to that in a moment. So bonds, TLT. Now TLT is the iShares Barclays 20-year Treasury ETF. This moves with bonds. We have been saying that we like this to the upside. All right, I talked about this last week as well, and we've been really have a bullish take on bonds. Even though you see Darknet had buys and sells and got out of the bond market, we had another strategy, which I'm going to be teaching tonight with the money calendar, that got us right back in right before this next jump here. So this is a really nice, interesting scenario where we've bottomed on bonds. Now, honestly, I would love to see this go lower. All right, there's a couple reasons. Number one, lower bonds typically mean higher stock prices. So, when the bonds move higher, that means the equity markets tend to stall, all right, which is kind of what we're seeing right now. Number two is a little bit more greedy. I'm a little more greedy in so much that, I'm building a place over in New Zealand with New Zealand dollars. So I like to see the U.S. dollar go up against the New Zealand dollar because it makes my investment look that much better, all right? I got resort property going up right on the coast, right on the cliff overlooking the the ocean there, and off the South Island, and it's absolutely gorgeous. But I'll tell you what, it's going to look even more gorgeous if that New Zealand dollar to U.S. dollar continues to tilt in my favor. So that's the greedy part of why I like to see the bonds move lower, because bonds moving lower means interest rates go higher, which means U.S. dollar goes higher, which means foreign currencies could tend to go lower. Here's a foreign currency that I've been looking for a pullback on, and it's finally starting to happen, and that's FXE. All right, FXE is showing that it wants to start to possibly move lower during the last month. We have seen an area where this particular parallel channel has happened between 109 and 108. Well, this week we broke through it. Will we continue? If we do, then I expect it maybe to come down to around the 106.5, 107 area, which is where the 50-day moving average is, before possibly either finding support or crushing through that. I still believe that we should see some pullback in FXE. And then finally, let's take a look at commodities, and more importantly, oil. Now, oil has been a very good friend to us recently because we have been on the bearish side of this for the last few weeks. And as you can see, not only oil has dropped, but a lot of the compadres to oil, that would be oil-producing stocks, have moved down along with it. Now, as you can see here, next stop really does look like potentially 8 or 8.5. Which is this is unbelievable. This is really showing the slump in oil. The Saudis are turning to the left. All right. What do I mean by turning to the left? Lefty loosey, righty tighty. We're talking about the supply of oil. Also, we've got a glut of it. Also, we've got more output here in the U.S. than we ever have. But you know what? That's all fundamentals. The market moves based on what you see, not what you think, what you hear, and what you feel. It's what you see. And right now, what we see is new lows that we have not seen before in USO. All right. And so, if I just really would kind of continue, we talk a little bit about the SPDRs, and we do a little bit of tracking on that as well. And then how to take those and put those into your penny and weekly list, and how to extract from there to create your potentially an ETF page. This is all available on the newsletter, and we just uploaded this one tonight. These upload on Wednesdays for those of you that want to take advantage of it. But I really just wanted to do my market outlook from within our newsletter segment. So that's market outlook. Let's go ahead and talk about call and put spread review. So in a nutshell, why do we spread? We spread so that we're able to take a small position in a very big name stock, in a very high price stock, and still be able to keep that trade at a respectable level as an option trader. Now, I mentioned that also it lowers your break even, it lowers your cost, it lowers your risk. It also will lower the day-to-day fluctuations in the event that whatever it is you're in may be volatile. Now, the case study that I want to talk about, and I'm going to go back and show you this because we actually had this pop up Monday morning. We had a case study right at the open Monday with priceline.com. So Priceline gave us a bullish opportunity. And so from there, what I'm going to do is I'm going to pop on over into options and the chains, and I'm actually going to change this to Priceline, PCLN. Now, there's two things I need to do. Number one is I got to change to Priceline. Number two is I got to take us back to just the day before Monday so we can look at those closing prices. And that's 616. Now, if you're going to back test using options, we have a couple of ways of doing it. Today, I'm going to show you the manual way. All right, the way that for some of you used to do it in Platinum, the manual way. We have the manual way in Tom's Option Tools. We also have the one-click automated way, which I'm going to be sharing with you next week. All right, so in this case, I'm going to go ahead and click, set my date to 6/16, click, and that's going to change me to 6/16. Now I'm looking at options from Friday afternoon. Now, maybe what we're looking at here is a potential trade that's a 30-day trade in Priceline. Now, what have I mentioned? Does anybody remember what I mentioned when it came to options and liquidity last week? What is the most liquid option in the entire month? It's always going to be the third Friday. So anytime I have a 30-day trade, give or take, I'm going to be looking for that third Friday option. All right, and my third Friday option is going to be the one in July is the one I'm more interested in, not the June 16th, which expired Friday, not the weeklies. I want to go all the way out to the July 21st, 130, the ones that expire in 35 days. All right, so I'm going to click on that. That's the only one that I'm interested in looking at, and I'm going to change this to 5% on Priceline because you're going to see a lot of. You're just going to see an absolute incredible amount strikes with Priceline. So I've updated this, and even this is just 5%. 5% takes us all the way up to 1890. All right. Now I probably should go and do a little chart work on Priceline. And so let's go ahead and just look at the stock chart of PCLN. Not P, another one I'm bearish on, Pandora. Pandora doesn't stand a chance with everything else that's out there right now. It's just, eventually they'll see it. Maybe they'll get bought. That might be the only chance they have. So here's Priceline. Now, if I take you back to 6/16, because that's the date we really need to look at, and let's also bring this down to 30 days. A 30-day window. Here's the 30-day window. Now, think what you might, but you can see a double bottom that's going on here. All right, that wasn't the buy signal, but it has a nice case. Puts a nice case out there for something that could happen. You know what else gives me a nice case for where it could go? Right up here around 1900, which was support, which became resistance, which is now resistance again. And 1900 is a very interesting place to look at as a target. All right. Now, in this case, I have some things I need to look at. Where are we at right now? Well, as of Friday, it was 1802. So this is a 100-point move. But let me tell you guys something. If you've ever looked at Priceline, this thing can do 100 points in a day. All right? It's done it before. So 100 points is nothing for Priceline. But, we have to use, in my case, targets. And my targets are based on average move over the pattern and average time it took to get there. And so average move and average time tell me that it's not going to do a 100-point move in one day unless we step into earnings and we get it right. All right. But every other day, probably not going to happen. So what we can do here is we can look at this and say, all right, well, let's take a look at if we're going to have a 1900 target, then let's look at what the 1800 calls are going to cost us. And Jay, you probably already of looking at this and you've got to be choking like most others when you see that this is a $4,300 call. All right, a $4,300 call that has over 40 points of time risk, which is absolutely insane. And now, if we did get back up into that 1900 level, we do see profit potential. Let's set this up correctly, though. Let's set it up exactly like we would set it up. And by setting it up, I mean, let's go ahead and add 1730, all right, which is the blue line. All right, really 1740. And then the red line up here at the top, which is really close to our target price, is around 1900. So if you come down here to the bottom, we've got 1740 on the low side, 17, let's call it 50. Let's make them round numbers. 1900 on the upside. So downside, stop, upside, target. All right, let's go ahead and recreate the risk graph. And now what it's going to do is it's going to reset the risk and reward right in here to give us more of an idea of what we really stand to make or lose on a move. So if Priceline drops to 1750, it did it tomorrow, right? I'm looking at roughly about a $2,195 theoretical loss. If it happens 11 days later, that loss is theoretically $2,821. If it happens 12 days to expiration, well, now I'm at $3,600 loss. And then, of course, if I hang on to this, if I fall asleep and wake up on July 21st and we're down here, I have the $4,320 loss. We don't want that to happen. All right. What we want to do is we want to set targets that are more respectable, like the 1795 target that's here that was held in May, held again right here in June, spiked back up, and it held just the last couple of days going into the pattern. So really what we see is that we can keep ourselves out of July 21st. If we find out that 12 days to expiration, we're down here and hitting these targets again, we can save ourselves, 50% of the loss, because that's the first thing you have to ask yourself. Remember what George used to always say? He had a phrase, and it's not the phrase that pays; it's the phrase that it keeps you from paying. It's too much, and it went like this: what if I'm wrong? What if I'm wrong? That's the first thing you need to ask yourself as a trader. What if I'm wrong? All right. Now, let's look at what if I'm right. And what if I'm right is if we do hit these targets up here. The theoreticals on this call put it somewhere north of $1,900. All right. Or not 1,900, north of 5,800. In fact, if it happened in one day, you'd be at 67.96, but it's not going to happen one day. But look at around that $5,800 level, because that looks very doable. All right. $5,800, by the way, is not a double. That's not a double by any means on something that's a 4,300. Well, excuse me. I'm sorry. It is a double. Excuse me. It is a double. It is a little bit more than a double. Right. But can we do better? Can we do better? And can we do it for less? And that's what spreads are all about. And so when we talked about spreads, this is a great example. Now, what I do is I'm going to zero this out. That's the 1,800 call that we've just looked at. What I do is I start down at the bottom, I start at the top, which is at the bottom. And I look at my target. Now, 1,890 is a good place for a target. And, again, it's like if you walk into one of those archaic places called a mall, and you go to the directory. The directory has two important things on it that you need to be well aware of. The first part is you are here. The second part is wherever you're going. All right. Now you are here. For me, you are here is 1802 on Priceline. Where am I going? 1900. So I'm going to look at this 1890 as a good target, and I'm going to put a -1 out there because that's my set. That's where I want to sell. Now it's just a matter of how much do you want to risk on the trade by going down to a buy side. So if I went to the 1880s, now I'm selling a $10.80 option here. Okay, do you see that, guys? Let me blow this up so we can all see it. I'm selling an option for $10.80. If I came down here and bought the 1880 mid price at $12.75, I really have a 2-point trade that can make what? 8. All right, that's a 500% return. All right. So we could start there, or we could go down a little bit more. All right. Let's say we don't want to spend any more than 5 points. So that means that if I'm going to sell for $10.80, I cannot buy for more than $15.80, which means right there at the 1870 mark, that's pretty much it. So let's go ahead and buy the 1870, and let's go ahead and sell the 1890. All right. I've put that together. I'm going to come up to the top. I'm going to click on risk graph. Now what I'm going to do is I've now created a trade that is it's going to cost $460. Let's squeeze this out so we can see it too. So here's Priceline. All right. The entry on this trade is $460. Now, this part here I want you to be well aware of. This is your slippage. This is if you are a floor trader and you got somebody that's trading you at the market. That means you're taking their market order and you're putting it in your pocket. This is if you're the retail trader and you're paying at the market. We want to be somewhere between mid price and the area where you're going to pay the most. All right, where you're going to be down. Okay, so somewhere between 0 and minus 190. Maybe we have to add another $1 on that trade. If that's true, then that 460 is going to look like 560. But maybe we put it in for 5. And maybe with all the fluctuation that goes on with Priceline, we get filled at 5. Very good possibility. Based on the mid price, we see a maximum profit in this example of $1,540, right? Or a 334% profit to risk ratio. Now, you might be asking, why didn't I go for the 5-to-1? Tom, why didn't you do the 5-to-1? Well, let's go take a look at it real quick. Maybe it's a 4-to-1. Maybe it's late in the day and I'm a little exhausted, but let's find out anyway. Let's go ahead and make one. So we're going to click on the 1880, and I'll do a risk graph on the 1880. So 195. Okay, it was a 4-to-1, excuse me. You might wonder, how do you know this, Tom? Well, because right in here, you see 195. Now, this is 155 on the other side. So it could be as, the slippage could be as great as adding 155 to the 195 for a larger entry debit. But if you're smart and you enter at limit orders, that's going to definitely save you some money in the long run. Now, max profit to max risk, 412%. But here's the part I want to show you. Break even, 1881.95. All right. So if you're looking to spend, let's call it $500 on a trade, and you decide, wow, I can do 2 of these, still your break even is 1881.95. Where if we used the first one, remember it's $4.60, but look at the break even, 1874.60. All right. It's got a better break even by, it looks like, an additional 7 points. So these are the things that you ask yourself when you're putting together these trades. How much am I going to spend? All right, where's for obviously the opportunity? Number one is always the opportunity on directional trades. It's always opportunity on non-directional trades too. And we do a lot of those as well here in Tom's Trading Room. But right now we're talking directional. So what is the reason for getting into the trade? Okay, so if I were setting this up, all right, and I can do this, all of this stuff, I could put this together in my down here at the bottom, below everything, I could put in, what's my entry rationale? Well, guess what my entry rationale is on this one? Money calendar buy. All right. Then I could go in and say, what's my technical stop loss? All right. So what my technical stop loss is that I'm going to come up here and I'm going to draw a line in the sand. And it could be this double, but what we could do is we could take it all the way down here. All right. We could take it right down there, which is 1781. And so if we close below 1781, maybe I go in there and I say to myself, all right, 1781 is my technical stop loss. My profit target, maybe 1900. Position size, $500 or less. Stop loss, well, my stop loss is going to be based on 1781 or $500. Okay, whichever is less, whichever happens faster. Profit target. My profit target is 1900, which is exactly what we saw there. The time stop. Okay, so the time stop on this trade, when I look at these trades, this is a bull call spread. So what I'm seeing is the longer I stay in this trade, the more it's going to, if I get up here tomorrow, for instance, we get up to this area tomorrow, which is close to 1900. Immediately, I'm going to see a return of a potential profit of $873. On a cost of what? Do you remember the cost was? 470, I think it was. Was it 430? 460. So if we double our money, one of the things we want to do is in our trade strategy, profit target. Okay, let's change this. 50% on a double, 1900 on the rest. Okay. Time stop could be, in this case, this is a 30-day trade. So if it's not going again, it's not going anywhere. 1 week to expiration. All right. Volatility stops in this case, none. Fundamental stops, none. We could be out before an earnings. So another thing we want to do is we want to come up and see, when are the earnings? 53 days. All right. That's outside. That's 8-8. That's outside of the trade we have. So we're not going to have any fundamental stops. Okay. Market and sector stops. We may look at the market and see if the market breaches or not. But the thing about Priceline is, if you know anything about it, it's more of a non-correlated stop. But you can add all this into your trade plan and your trade rationale. And then from there, it's just a matter of saving this trade. So I'm going to go ahead and save this trade. Let's squeeze this in so we can actually see it again. So here's our trade. Now, let's see what our trade has done in the last couple of days. So here is Monday's close, up $320, 69% return. All right, but if you were to get out of it at the market, I've seen so many people do a Priceline trade, make money, and somehow figure out how to lose it by exiting at a market order too quick. All right, so if there's any lesson you can learn here when you're in a trade like this, that is, make sure that your bid and offers that you get out at a respectable amount. So this is one. Now, we have not doubled this yet. All right. Let's go ahead and look at the next day, which will be Tuesday's close. Now we're at 87%. We're getting there. All right. Now let's take a look and see what happened at the end of today. 91%. Okay. That's the mid price. Now, what should you be doing with this trade right now? Does anybody know? If you have this trade on for $460, all right, this is the July 70-90 spread. I'm going to show you what you need to do with it. Right in here, folks. What you need to do is you need to go into your brokerage firm. This is what I do. When I have an order in, I go ahead and put in, here's my call spread. All right, let's go and look at July 17, and this is the 1870, 1890. All right, and I want to, let's say I had two contracts on. I want to sell to close what I bought. I want to buy to close what I sold. Let's say I sell half of this. If I want to sell half of this and I got it at 460, I'm looking for a credit, all right, because I bought it at a debit. I want to sell it at a credit of, let's call that 920 or 100%, and you can make that a good till canceled. There's your order. There's your exit order already in place so that, God forbid, you're away from the screen, that the order could get filled. Take a look at this. 560 by 12. That was the close today. That's a wide spread. Would all of you in the room agree that that's a wide spread? You do not want to get out of this trade at the market, because if you do, that's what you're getting. And you get it, if you got in at 420 and you're out at 560, well, where's my double? All right. You put the order in for 920, you put it in for your double, and this thing is going to move around all day. And there's going to be people wanting to get into the trade that you're getting out of. And they may be willing to pay you $9.20 for that trade. All right. So I may have spent a little bit longer than I wanted to on call and put spread review, but it makes a lot of sense. I wanted to show you exactly how a very big name stock like Priceline goes through its category and goes through the process after you put a trade like this on. Okay. Now let's do a quick darknet review. Now last week we talked about darknet. We talked about what darknet is. And I'll do a quick review on darknet. So let's go ahead and pop over to, let's see, we'll get to darknet in just a moment. I wanted to just finish up our homework assignment by showing you something that you can do in the tools. And this can be done in any level. Right, we have a thing called portfolio performance. So you can save your trades. You can actually put them in folders. So I've been saving all of our case studies that we've been talking about. And I'm going to add Priceline to this too. But you have Trading Essentials. All right, I have my Trading Essentials webinar that started at the beginning of June. And I've got the trades in here. And what I did was I called them TE for Trade Essentials. 6/17 means June 2017. There's Agilent. There's the Apple trade we did on week 1. There's Anthem. There's GLD. There's Schlumberger, DIA. There is another gold trade because we did the spread. And then TLT. So let me just show you real quick how we would put in. Well, first we'll just calculate and see how things are going. So this is from 7/7 to 7/21. And you can see the calculation on here. And you can see, the Priceline trade's already been entered. So the Priceline trade is in here. But you can see it, where it is, where it's been, where it's gone. All right, the highest it's gone, the lowest it's gone, and then where it ended out today. So right now it's on a high. But look at, for instance, let's go down to Apple. Here's Apple. Apple never got anywhere from the time we put that one on. The lowest it got was minus $365. Right now it's down $353 for that 155 call. All right, we have a gold trade that we looked at last week. That's down a little bit, down $44. It was down as much as 60. But I want to show you a couple of other ones. Anthem, which started off not so good. It was down $92. Then it raced up and was up as high as $177 profit, and it's now at $132. All right. If you look at the bonds have been fantastic. I mean, they started off really well. The worst that they got was up 90. They're up 620 right now. This is the gold spread, which is actually outperforming the gold calls. Up just a little bit, all right? And so if you look below that, you can actually see a graph or a chart of what's happened in terms of what's called R multiples, all right, which is basically your profit to loss. Below that, you get a performance report, which shows you where your profit P&L is right now without commissions, and you get information like total gains, total losses, number of trades, etc. Right? This is again part of the process that you want to use as a trader as you're going through and putting trades on. Is you know what? You can use a virtual trading platform. It's great. But the virtual trading platform is not going to show you what we can show you in here. It's not going to show you this information. It just won't. And the way to get to that is you go to trades and you go to portfolio. And then I'm looking at performance. All right. I could go to charts too. And what I can do is I could run an entire charting piece on this, looking at my trade essentials trades from the beginning of where we did week one to where we are now. And if I just do a quick calculation on this, now what it's going to do is it's going to go back and it's going to calculate everything that happened on a day-by-day basis as we added trades. These are all the trades together. And as you can see, things weren't going so well June 8th, June 9th, 12, 13. Then we added in a few more trades and boom, we went back above and we stayed above and we added a few more trades back on. And this is where we are right now is with trades week one and trades week two, things have definitely gone in our favor, right? You have access to all of this information. And any of you that are in here that are brand new to this, it's really going to help you learn the process of portfolio management. Those of you in here that are smart and do this already, this is going to make you smarter. This is going to make you more knowledgeable about your trades in general. All right. So I wanted to show you that and tie it into the case studies that we're doing. Let's go into darknet. Let's take a look at some darknet trades. So yesterday was an interesting day, and I want to bring you to June 20th. All right. We can actually go through every single day in the last week and look at how some of these have performed, but it's going to take quite a bit of time. I'll try to do some stuff as quick as I can. So we started out on the 19th. The 19th was Monday. So let's take June 19th. Let's back up. We'll just look at a couple of days here. QQQ, Google Priceline. I wonder where that Priceline trade came from. There you go. All right. We also had a money calendar on it too. But this was, when you get overlapping, and I don't see this all the time. This happens very seldom. But when I get, for instance, money calendar, which I'm going to show you tonight, and I get darknet giving me bullish signals at the same time, those I lean into. All right, I lean into those. We've seen it happen before. All right, and so there's your trade, your buy signal right there at the open. Because that's when you get these. You get these signals. You'll get them throughout the day, but they started at the open of the day. So there's Priceline. But let's take a look and see what else we had here. We had Baidu that came up on Monday as well. That was a rebuy. The initial signal was at 185. The rebuy came in at just above 175. All right. So what we'll do is I'm going to let me get rid of a few graphs here, or just move some stuff over so that we can bounce back and forth. All right. So we know where Priceline went. All right. We all know that. If we go to latest, you can see where it's gone since the buy signal. It's just gone straight up. How about Baidu? What did Baidu do since Monday? And not every one of these are going to go higher, but Baidu went from 176 to 180, so it's up 4 points. All right, what else was on that list? Let's go take a look. Google, all right, was on that list as well, and QQQ. So let's go back and let's take a look at each. QQQ since Monday. All right, so we'll go back 2 bars from where we are. 1, 2. So QQQ went up, down, and back up. So it is up from the Monday morning. All right, just not like the other 2 stocks we saw. And then finally, Google. Now this is GOOG, but we can look at both. All right, GOOG did the same thing. Up, down, up. And GOOGL, what did it do? Well, it's going to do basically the same thing. All right, it's going to have the up on Monday, down on Tuesday, up on Wednesday. So Google is actually up about, looks like 7.5 points off of Monday's open. All right, so that was Monday. Let's go look at darknet and see what it had for us on Tuesday. Now, Tuesday was a very interesting one because it had a lot of trades on Tuesday. Reason I know this is because I was looking at some of these trades on Tuesday. In fact, I was looking at it came up like this. Let me just show you real quick what we saw. And we saw, well, not only Google and Priceline, but we saw, I'm sorry, 20th is what I want. Looking at the same thing again. 20th. And you're going to see this huge amount of stocks here, 28 of them in the darknet piece. But remember what I told you to do? Let's narrow this down just by simply looking at the best of the best in terms of liquidity. So what do? We go to our penny pilot stocks. I taught you how to do this on week 1. These are the pennies and weeklies are the top 400 stocks. Now, look at this, guys. Gold, GLD came up yesterday. Silver came up yesterday. Newmont Mining, GDX, ABX, GG, AEM, Kinross Gold, Goldfields. 9 out of 10 of darknet stocks that appeared in the penny pilot program with weekly options were gold. Fossil is a retailer. All right. Also, I want to make you aware of the fact that all of these were buy signals. They were first-time buy signals. Fossil was a rebuy. All right. So let's just take a look at a couple of those right now. I mean, again, all you have to do is just click on the symbol. You get a pop-up chart. Okay. Buy, sell, buy, sell, buy today. All right. And this was yesterday, by the way, not today, but yesterday. So silver, let's take a look at silver. Silver had nice buy and sells here, and it had a buy again today too. Very close to that, close to a double bottom. All right. Then you've got some gold stocks out here, and let's just take a look at the one that has the least amount of slippage. So we've got GLD and SLV are 0.1, 0.1, but then you come down. Here's a 0.2. Here's a 0.2. Let's look at both of those. So GDX Market Vectors Gold Miners ETF buy signal, and then of course, what was the other one? It was AEM Agnico Eagle Mines, also buy signal. Okay. This one had a buy. The last signal it had was a buy at 45, a rebuy down here around 39.5, and then the sell came in at around 43.5. So winner off the rebuy, loser off the buy, slight winner when you look at them together. Okay. So now let's see where they are today. Even though it's just a day later, we're not going to see much. All right. You're just not going to see much, but I want to show you. Let's see GLD. Okay, here's GLD up today. Not much, up a little. That's nice. Nice little start to the silver run and gold run. SLV. What did SLV do? I don't think it moved much at all. It actually moved down today. So it's down a little bit. Even though you had a green candle there, that green candle just represents the fact that the close was higher than the open. Still down slightly today. All right. I'm long both of these, by the way. And then if we were to look at GDX, the gold miners. This one's going to be a little more volatile. Look at the move it had today. That's nice. That says that when gold even starts to bottom, GDX miners start to be bullish. They usually precede gold, and they move faster than gold. GDX was up off the open this morning, or off the close and open. We went from 21.80 to about 22.10. Not a big move, but good, again, good start. And then, of course, there's Agnico Eagle Mining, and the symbol for that, AEM. So if we look at AEM on today's chart, AEM. And you can see here, Agnico opened lower than it closed, but it also traded up higher and ended up having a 1-point range today. But it actually had a really nice move. Looks like about a 75-cent to the plus side. So you can see the kind of move that this, if you look at, for instance, Agnico, where was it when gold had that big trouble day just last week? Well, Agnico was at 50. Right now, we're talking about 46.5. So that's a nice little bit of room there between the two. Okay, so that is Darknet from yesterday. So now let's take a look at Darknet for today. So Darknet for today did not produce that many signals. And anytime you want to update from wherever you are to today's date, you click on the bottom go button. The bottom go button will take you to today. We have 3 trades that are penny and weekly stocks. We have Best Buy, Rambus, and Yamana Gold. All right. So I could look at each of these and, now gold, again, I'm going to skip AUY because it has a 1.2 slippage. I'm more interested in these two. All right. Let's start with Best Buy. Best Buy is the highest dollar stock that we see here that also has it has the lowest amount of percent to break even. It's percent to double, excuse me. Percent to double is the lowest. So what happened with our friends over at Best Buy? Well, what happened was this. We had a positive earnings report. It jumped. It had a nice wide candle. It did not exceed that candle, so there was no more momentum to the upside, so it only had one place to go, and that was down. We have a buy signal here. I've got another buy signal right back down here where the gap is filled. But, so if you're using more than one trading strategy and you say to yourself, well, my buy signal looks really good at 52. You don't really want to, I don't like to wait to 52, but then I don't want to put all my eggs in at 55. How about I split it in half and I say, I'm going to put half my buys in here and I'm going to put my other half my my trading units in down here as a second level, right? Because of another trading strategy that I use. Now I've averaged in. That way, if we get the first buy and it races off to the moon, at least I didn't hold out for 52 and now I'm watching the thing move without me. I got half a trade on, right? And if it does come down, then I do get the other piece of this, averaging down into what I would have put into the same units as one signal anyway. All right, so that is Darknet. Also, Rambus. Now, I looked at Rambus. I was looking at this earlier today, and it's an $11 stock. I mean, I'm looking at it, I'm thinking, all right, it was a buy here at 12.5, and now it's another rebuy here at 11.75. It's going to have some really cheap options. They're okay, but I don't see a whole lot of movement out of this. Now, at this point, Jay Bird, are there any pertinent questions up there that I need to cover with the group before we move into the money calendar?
Well, this one just popped in. Is why do you think gold seems to be bullish currently? Is that a precursor to a major correction?
Well, gold has long term been a risk off commodity, and what that means is that typically gold will move in times of violent moves to the downside. Gold is one of the best places to put your money, but also when we have small moves, gold will tend to move with the overall market in little small, summer lazy days. Summer lazy days, in my mind, don't really start happening for a couple more weeks. But keep in mind that gold has gone from risk off to risk on to risk off commodity. So it kind of moves into its own. And so I don't really know what the why is about that. Again, I've said this before. I'm really not a why guy. You guys, if you know anything about me, I'm not a why guy. I just, I let the trading signals that I get. That's the boss and I'm the employee. And my job is to put the trades on when I get them. And so that's, kind of, when your boss asks you to do something, when you ever said why to him? Why? Why should I do this? Why should I sweep that floor? Next thing you need to know, he's going to be sweeping you out the front door. He's going to find somebody else that can do the job without asking why. And keep in mind, I say this, as humbly as I can. The markets, a lot of people are in the why. Okay. And why does this happen? Why does that happen? And keep in mind that those are very good questions. But a lot of times why will keep you out of a good trade. It's done it for me. Sometimes why keeps me from doing something stupid, but more often than not, why keeps me from a good opportunity. Why is Bitcoin trading as high as it is? I had this was a couple years ago. I had a Bitcoin mining machine in my garage in my house, and that ran on until it got so hot that number one, the Bitcoin machine was just it was almost too hot to touch, and it was because no air conditioning in the garage. And you can imagine when I opened the garage door, and all of a sudden it's 100 degrees in there. But then also the other problem I had was that the electricity cost was just crazy because this was such a huge machine. But a lot of people are asking, why did Bitcoin trade at almost $3,000? And, I was asking that question years ago when it was trading at a couple of $100. I'm glad I didn't ask that question for very long because I'm still hanging on to those bitcoins, and that's going to be a long term hold for me. 2650, those stupid things are trading at now. But again, why is a good question, but don't let it keep you from doing things that if you've done your research, you spotted that opportunity, you've back tested that opportunity, you are happy with the results of it in the past, you're happy with the results in it in the future. Let why be something you ask after the markets are closed, like you're doing right now. Jay?
All right, that's good. Now, the other one that was coming in was more of an administrative thing in regards to integrated investor and profit source. We want to handle that at the end.
You know what? We're working on some stuff, working with those guys, and I'm hoping to have some really cool information to share with you guys here. It may not be this. It may not be this month, but I'm working with them. All right, and we're going to have some pretty cool information to share with you later on in the year. It might be sometime in the fall. Love the product. Absolutely love the product. I just also wanted a different way to automate to automate swing patterns, and that's what you see here in front of you. So let's move into the fun part of the night. Although I think all of this is fun to really learn, and that is trading with the money calendar. And so the money calendar, for those of you that are looking for it in our tools, what you'll do is if you simply go to the complete trader here, you'll see 4 different things. You'll see money calendar, money clock, money holidays, and search tools. Now we have many different patterns that we can go through and look at on here. The money calendar is something that we're going to be talking about tonight. I discuss money clock and I discuss money holidays on some of our with some of our more live events. But I'll give you an idea. The money clock is an intraday clock for people who actually are trade during the day, right? That this is their full time or that they want it to be their full time profession. We actually find patterns with the best time to buy and sell stocks within a time frame during the day. Money holidays. Well, we have a way of looking at the most popular stocks in and out of the biggest holidays, the 8 major U.S. holidays each year. We got one coming up. But I'm going to focus right in this area right here, the money calendar. And so before I go any farther, I'm going to go ahead and set myself up here. We'll get into this in just a moment. But I want to talk a little bit about the money calendar and what it does. So what this thing does is it hunts down simple short-term patterns every single day, actually, not every week, every single day, using a minimum of 10 years worth of historical data. And then from there, what I do is I go in and cherry pick using our double finder tool. This is something I showed you on week 1. And I'll try to find those minimum 1-to-1 risk-reward ratios, but a lot of times I find more. And down here, I can't say it enough. This is so valuable that I filed a patent for this. Once we had it all ready to go and it was fully working. All right, we filed a patent with it with our patent attorneys, and we are in the process of being granted a utility patent for this application. And so it's very exciting for us in that matter. Money calendar is something that follows all of our rules. We spot opportunities, and it identifies opportunities, that's for sure. And what I do is I look for opportunities designed to double my money. All right. The other thing it does is it only shows me high probability trades. It sifts through and looks for patterns that are 90% or greater. And then finally, I'm looking for patterns within 30 days or less. That's the 3 things that Money Calendar does for us. And from there, as an option trader, I can really hone in because, 3-dimensional option traders are the ones that have the best chance of consistently making money. What's a 3-dimensional option trader? Well, let me tell you what a first-dimensional option trader is. A first-dimensional option trader is, I like options because it's just like a stock, but it's cheaper. Wrong. That's the wrong reason to like options. All right? Because if you like options because it's like a stock, but cheaper, you tend to be an out-of-the-money call buyer, not even a put buyer, an out-of-the-money call buyer, and every once in a while you might hit one, but most of the time you're losing money. All right? The second trader, the one that's that second dimensional trader, is one that realizes that time is against them as a buyer. So they have to think about ways of getting into a trade that has that eliminates, or you try to eliminate, that time value as much as possible. The third dimensional option trader is one that uses price, time, and volatility, but we use it in a very unique way. Price, because we're looking for the average price in the move of that pattern. Time is how long does it take, and volatility is going to tell us whether we're buying calls or doing a spread. Okay? That's what we do. And so the 4 steps that I look at for finding money counter trades is: number 1, it has to have happened at least 90% of the time in the last 10 years. Number 2, I'm going to narrow these stocks down because I may get a few, and I'm going to narrow them down. I'm going to show you how we narrow them down with the highest profit potentials. Next, we're going to select the stocks with the strongest price movements, and then we're going to hand select that option that can double your money. All right. So the monthly view looks like this. You see it here. All right. So this is an example. I'm going back to January. I'm showing you. Now, let's make it real simple. Green means buy, red means sell, and yellow means somewhere in the middle. All right. Now, let me make it a little bit more complex for you. Green means there are more bullish opportunities on that day than bearish. Red means there are more bearish opportunities than bullish. And yellow and orange means there's a mix. Okay. There's a mix of them. So if I'm looking at, for instance, the 23rd here, and I see there's 85, that 85 means out of all optionable stocks, by the way, there's somewhere around 4,000 of those, 85 of them have a pattern that starts on this date going forward in time based on the last 10 years. 85 of them have a start date today that have a 90% historical winning ratio. All right. And of those, 89 of those, 89 of those, 89% are bullish trades and 9% are bearish. So if I click on that date, it's going to open up the next window for that particular day. And as you can see, I have them sorted, already pre-sorted, but I want to just show you IBM. So IBM came up as a 26-day trade. The last 10 years, it netted 60 points in profit. 9 out of the last 10 years during this pattern, which started January 23rd. It ended on February 27th. The other thing I see is that the average profit was $6 on each trade. That's a nice profit to look for in a pattern. And the power meter, which is our most recent addition, is positive. What that means is that the trend, the pattern overall, the average pattern is getting better and better, right, now than it was when it started. So if I click on IBM, it opens up the page and it shows me this information. Notice here where it shows 90%, 9 of the last 10 years have been winners. 2007 dropped. But look at 2008, big move up. But the rest of this area here I really like. And it just shows that the average of this pattern has gotten stronger. Pattern's growing, high profit potential. And then I can actually click on these and I can look at individual pieces and I can see what they've done. But this is the actual data that you see here. You know, when does the pattern start? When does it end? Is it bullish or bearish based on whether these are green or red buttons? And then you just go from there to the options. We go into the options chain and we go back and we say, oh, based on where IBM is and where we're projected to go, the 170 call looks like it makes the most sense on this particular trade. Why? Well, one of the big reasons why is that over here, I only need a 3.9% move in the stock in order for this option to double in value. Okay, by the way, what ended up happening, here's the trade as we put it into our software. Here's what IBM did, 4.89% during the pattern. By the way, do you think that trade doubled in value? It did. It more than doubled in value. Here's another one, January 9th. All right, 45 trades. We had 40. This was a 49 and 51% day. 49% of the trades that were 90% or greater were bullish. 51% of the trades that were 90% or greater historical probability were bearish. You click on that day, Priceline came up. Priceline came up as one of the trades. Again, look at this. Last 10 years, it's collected 594 points over 10 years. 10 out of 10. Last 10 years, the pattern's been accurate. Love it. Almost $60 on average in the pattern. Had a power meter gauge of 1. Anything over a 0 is good. Click on Priceline. Let's find out a little bit more about it. Okay, the pattern started on January 9th, and this year it ended on February 17th. It's projected to end February 17th, 30-day trade. Moving forward, look at this. Look at this. Nice pattern, full momentum right now, which is even higher profit potential. Accuracy, 100%. I love what it did in the last 3 years. Over $100 during the pattern. This is the one I talked about, folks, where if you're going to spread anything, you have to spread Priceline. So Priceline at the time, this was, by the way, was actually quite cheap. You're looking at the 1590s were $17.15, the 1600s was $13.95. So that was actually something that could be put together for a little more, for around 3.5 points. And as you can see here, $3.20 or $320 for a 10-point spread, 212% maximum profit potential. Priceline goes up 5%. All right. What's 5%? 5% is we're talking about something that was trading below the 1575 level that got up to here around the 1650. That's $75. All right. Well more than what we needed. If you remember, let's go backwards just a moment. What were we selling? The 1600 calls. All right. Where was the stock price? 1625 and north of that. So nice move. I got one more, and then we're actually going to look at some for today. So this was the 6th of February. And February, we get into those first couple weeks. And so the first couple weeks have been really nice and bullish. And on Monday, February 6th, we had mostly bullish opportunities. I click on the 6th. I see our good friend Apple, which at the time had a pattern, had a 90% pattern from February 6th going out 30 days, 90% accuracy. About a $4.50 move during the pattern. This is enough to have a nice potential trade. Click on Apple. We know that we see the pattern between February 6th and March 17th. Again, great bullish movement. Click on the pattern. The only time we had a down move was in 2012. And, again, why? They were switching out phones. And I think this was the period of the 4. I think it was the 4, maybe? 4 or the 5 or 5, 4 or 4S, didn't bode well with everyone, had a little bit of a drop, but the overall pattern is strengthening, high profit potential. And as you can see here in this case, 125 calls were only trading for $1.26. Now the 120 calls were $3.25. They had a little bit more of a, in this case, a little bit lower of a percent to double. So why I picked these, if I go back in time and think about it, I don't know. I just did. And of course, Apple, again, 125 calls were really nice spread, 125 by 127. And of course, stock goes up 3.63%. This one actually doubled in value, all right, because it happened quick. So what do? We spot the opportunity, we create the low-risk trades, and we plan, execute, and manage. And this time it's not going to be darknet. It's actually going to be looking at what? The money calendar. So let's take a look at the money calendar for today or for this month of June. Now up here, you click on the green box. This gets you to the money calendar. If you click here, you then can go in and you can do one of two things. You can either view all markets or we can do an application on your favorite stock. All right. So right now, let's just do this real quick. First person that buzzes me in, favorite stock. Has to be a popular one, though. Don't give me some 5-letter thing. All right. Favorite stock. Key it in and we'll take a look and see. Boom. Howard, you're first with Ford Motor Company. Symbol is F. So if I go in and this one's more of a manual, so we'll go to F. Here's Ford right here, F. And what I can do here is I can say, give me a trade starting within 10 days. I want to look back 10 years. And I want you to show me the top 10 results. I call this the 10-10-10 with the money calendar. All right. Click on show. Bang. Okay. So what this is showing me is that green it means buy. But if you look down here, this is 0 days from now, 5, 10, 15, 20, all the way to 35, 40 days. So this tells me that about 2 days from now, we got a 22-day pattern coming up in Ford. It's 70% accurate. It's not 90, it's 70. All right. So that's a potential. All right. You know what? Wow, I got 3 people that asked the same one. Did you guys all band together and say, let's all ask for 4, 5, 6. 6 people asked about NVIDIA. So we have to show NVIDIA. Obviously, something's going on with NVIDIA that's got everybody excited about that. All right, this is the last one. Then we're going to look and see what the calendar's showing us for good trades. NVDA. Come on down, and we can scroll on down into the ends. And there is NVDA right there, folks. Everything's already preset, so all I got to do is just click on Show. 70, 70, 70, 70. They're all 70s. All right, 70% trades that start out within the next 5 days. Now, how are they sorted? Well, they're sorted by how many, which one gives us the most dollars during that trade? Which one brings in the most profit dollars during that trade? So if I go and I actually click on the 28-day tab, it's going to give me some details. Shows me the 28 days. Over here, I've got details and I've got trades. All right, the details show me the net profit, number of trades, winners, losers, largest winning trade, largest losing trade. This is all good stuff to see. And then what you can also do is you can click on the trades themselves and you can see where were the 3 losing years: 2008, 2010, 2011. Not bad. Hey, this looks good. Look at these last 2 years. Look at last year, 2016. Click on it and you get the pattern from last year. This was day 1 of the pattern, $46.62. This was the ending day of the pattern, 63.17. That was a 20-point move. All right, not 20-point move, more like about a 15-point move, but a nice move. And I love to see money calendar patterns that just do this. It's like watching grass grow. And in Florida, watching grass grow, it grows every day like crazy. So that is the Money Calendar app. But if you go to the actual View All Markets piece, this is going to give you the monthly view. I'm going to come down to the monthly view, and today's date is the 21st. Now, you notice what I'm talking about when I say that we're kind of in a little bit of an ugly week until Friday. Well, let's look and see why. Today, we actually here's our bulls, all right, and then here's our bears. Now, I have the bulls on top and the bears on the bottom, but we can do sort methods here. Let's sort for accuracy. Are there any 100 percenters in this group? Oh, yeah, and they're all down. All right, CHK, Devon Energy, Energy, Goldman Sachs. Goldman Sachs is a bearish move, and what you're looking for is bullish or bearish moves, and you got to make sure that power meter is a positive because it's going to sort. It's just going to do a better sort for you. When I look at Devon Energy and I look at CHK and now WBA looks very interesting too because it has a 35. But that's where you'd go and you'd click on it and you'd look at it and you'd see, wow, this looks really good. And then, what we want to do is we'll go to stock charts and let's look at WBA on the stock chart just because I want to see where it is today. Not so much that I want myself to I don't want to be taken out of the trade. Walgreens. All right, so Walgreens had a rough couple of days, but today it's saying, guess what? Money counter. And maybe what you can do is you can add your own little bit of stops in here. So if we go below 77, which is a few pennies below the low that occurred last week, then perhaps that's where we want to put our stop in place. All right, so money calendar. And you can see here, last year, this is a bearish move. So now don't get confused about this. These greens right here do not mean up. It means profit, yearly trade results. All right, but down here, you see what happened? We started here, we dropped. Okay, so bearish move, we dropped. Now, let's take a look here again with the stock chart. And I had this wrong. I'm looking at this and I'm thinking that Walgreens gave us a buy, but it gave us a sell, which means this is great because we're so close to the bottom down here that we could take out these lows and drop ourselves down into the mid 70s. This looks like a very, very interesting trade. WBA. All right. So WBA, and that would be just a matter of, we spotted the opportunity. Now, what's our low risk trade going to look like? Well, that's where we go and we go back to our stock and option graphs. And let me get rid of a few of these. Let's go back here and let's go ahead and type in WBA. WBA. I want to, actually, first I want to go to today's date. Now we got WBA. Let's update today's date with WBA. And again, how do we pick our time? Well, you go and look and see when this trade actually expires. June 28th. Okay. So that's next week. So what we want to look at is we want to look at an option that expires with somewhere around June 30th or greater, right? So going back to WBA, let's go back to the actual chart itself. June 28th, June. There's 14, there's 21. No, these are July's. There's the 30th. That's what I'm looking for. I went too far. So let's get rid of everything except the 30th. Let's update the 30th. Next question. What was the average move? The average move on this was $1.92. But again, what's it been doing lately? I'm thinking $3 might be the target for this. All right. Plus, we had a nice little pop already down, so we might get a continued run. So let's go back and look at that trade once again. This time we're going to come down and look at the put options. We're at 78.12 right now. All right. Is there an earnings report coming out on this stock anytime soon? Well, that's something where we need to go look at the stock chart once again. I don't see anything on it. It doesn't show me on the chart. So back to our option tables. And if we look at something that expires in 9 days, I don't think earnings season really officially doesn't start until after the 4th of July. So I think we're safe here. So what we can do is we can look at something that might have some lower. Say again, Jay?
Tony's typing in that it's on June 29th.
Perfect. Then we want to potentially be out before the 30th. And if we're going to be out at the 28th, which, by the way, is the final day on the money calendar, then we're out a day before earnings, which is great. You know what else this means? This means that implied volatility is not going to drop like a stone on us because everybody's going to wait until that next day to see how the earnings turned out. So we go back and we look at the trade once again, and we see, I want to get something that actually has some decent delta in it. I may have to go a few strikes in the money, which means that if we go with, now the stock's 78.12. If we go with a 30 put, as an example, this is kind of how I go through and look at these. Let's just take a look at what a 30 put might do for us. So risk graph. Your 30 put is going to look like this. Now, if we get down into this red area, all right, which, by the way, is somewhere between red and blue is the target. Let's go ahead and look at the red area down here. We're talking about something that's going to cost us $2.63. At the red area, we're not going to quite double in value, right? We'll get close, $242, but don't look for a double here. This one looks more like a 50%er. And I got to tell you, when you're dealing with down stocks, with stocks that are going down and you have short time frames, it's hard to get a 100% move unless, of course, we get another day like this where we drop in one day down here. Then you're going to get a pump in volatility. Volatility is already starting to move up. We get a couple more days down, added to the fact that we're getting closer and closer to earnings, and there it is. Tony, you're right. I didn't see it until we put the graph up here. 629 BMO before market open. We have all this data right here at this site, guys. You don't have to go to all these other sites to find all this stuff. We have it all right here. So there's the trade, a potential trade on money calendar. Now, I want to show you a couple of other things here. Number one, we can go back to view the day just by clicking on a day, and then we can take a look and see, maybe I want to balance something out. Look, the Google sisters are on here, all right? And if we look at GOOGL, all right, GOOGL shows us June 21st to July 21st. And look at this, 9 out of 10, but look what's been happening lately. It's been pumping up there a little bit. Average trade, when you factor in the losers and the loser and the winners, is 26.43. But we're getting closer and closer to this 50 number. So I like that. So how do you place a trade again using money counter? Number one, where are we going? All right, let's call it 30 points. Let's just round it up to 30. 30 points higher than where we are today. How long is it going to take to get there? July 21st. We have everything that option traders out there. Option traders, again, like I said, some of them will say, I think it's going up. Some of them say, I think it's going back up to X. But where they all get it wrong is the how long is it going to take to get there part. And sometimes it doesn't take long, and sometimes it takes longer. Right? So good news is we have an option that expires on July 21st. So it's a matter of going to stock and options table, I'm going to change this WBA to GOOGL. And I'm going to click on update. And then I'm going to look for the July 21st options, which are right there. 30 days to expiration. Let's get rid of these because I only want to look at those particular options. 5% up. Let's scroll down. I will bring this up so that we can see it. I try to do that as much as possible, folks. I apologize if I didn't. Okay, so we're right here around the 980 area, aren't we? 978.59. Let's count them off with me. 10, 20, 30. 10, 10. That's where we're selling. Okay? Where are we buying? Well, let's use the $500 rule. Again, this is the part where you make the decision. I'm just going to do it as a $500 rule. Don't want to pay more than 5 points for this spread. So I can't pay more than 12 for what I'm buying. Down, down, down. Well, 12.10 right here. This is close. Close enough. Maybe I could put a limit order in for 5. All right, so buy to 9.95, sell to 10.10s. And you just come up to the top again. And we click on risk graph. Now the risk graph has come in $510. 194%. That's more than a double. So you're seeing $500 entry debit up to $990 potential reward. If we get to 1010, all right. Oh, by the way, let's go ahead and plug in our risk and reward and bring this graph in a little bit better. So let's say risk is 940 because that's where we hit last week some lows. And our reward potential is 1010. So 940 to 1010 would be a good area to widen this out at. What do? You come down to the bottom into all the numbers. You see stock limits. 940. 10, 10. Click on risk graph. Now, what have we done here? Well, we've created the trade where, in fact, you know what? Let me just push this to 1020 or 1030, only because I want you to see the trade in full. All right. There we go. So now we've got our risk graph. If we come down into this area, and this happens like, 10, 20, 30 days. See how this is set up? 30 days to expiration is red line. 20 days is your theoretical risk graph for the blue line. All right. 10 days is your theoretical risk graph. That's green, 10 days to expiration, and black is 0 days. So here we are in the graph right now. We're dead center. All right. Right in here where the stock price closed and where the 0 line is. If we jump up here tomorrow to, let's say, 1010, that's going to be right around here, folks, then you're going to see the red line is where we're going to be popping. And the red line really only shows a profit of $384. You might think, wait, that's not fair. We should be getting, what? Should we be getting all the way out here, Tom, that $990 profit on the stock? Well, that's if we hang on to it all the way to expiration, because remember, you have a buy and a sell. They move together in tandem, and they start to widen as you get closer to expiration. That's great if it starts to lose money, because see, if it drops down, let's say it pops down to $950, right? Well, you're not out that $510, right? Theoretically, you're only out about this much, about $210, right? Because again, the one that you sold is actually working in your favor. But if this moves higher and moves up here around this area, this 1005 area, which is 1005 to 1010 area, you'll see what will happen is you'll see this start to move a little bit more. So at 10 days to expiration, at 1010 on the stock, you're really looking at about a $490 profit. But 10 days later, that's where you see the $990 profit. All right. Again, spot the opportunity, money calendar. Create the low risk trade. There you go is Google. Plan, execute, and manage the trade. And that's where you go and you use your broker's platform. And you type in, and what you do here is you're just verifying things. All right, you're verifying, all right, what am I going to buy? I'm going to buy to open what? I'm going to buy to open the 995 calls for July. And I'm going to sell to open the 1010 calls for July. And that's what I'm going to do. I'm going to do that as a debit. All right, and I want to do that for how much? 5. Okay, This is me setting up an example right now. Good till cancel. If I don't get filled today, maybe I get filled tomorrow. Right now it's 420 by 6. So it is showing you that 510 is the middle. It is showing you this, but these are going to move throughout the day. All right? This is just setting the trade up for you. And then once you've set that trade up, then it's a matter of, if you're getting filled, then moving into creating the sell, creating the exit strategy in the event that you're away from the computer when these things happen. All right. So spot the opportunity, create the low risk trade, plan, execute, and manage the trade. Now, what I want to do is I want you for tonight. First of all, let me ask the question: how many of you learned something tonight? What did you think about this new stuff? A lot of you that are here, have been here for the first time, and you haven't seen anything like this. This is stuff that I got to tell you, and there were a few people that were still using platinum, and God bless you, because there wasn't anything else out there like it. But there is. It's right here. You just didn't know about it, and we have all these other additional add-ons that are available too. And I just wanted to show you a little bit of how to use them. But more importantly, this is something that I wanted to share with you guys. That if you're using something that works, keep using it. All right. If you're looking for something that works, that's what I wanted to show you a little bit of. So tonight, what I want you to do is I want you to do a little bit of homework. All right. And the homework I want you to do is obviously follow the case studies that we discussed tonight, even all the ones back from week 1. All right. And then what we can do is we can create some green money calendar trades this week forward. All right. What I mean by this week forward is go back to the graph. All right. Go back and click on, wherever you are in money calendar. If you click on view month, it takes you right back to the month. Go to the last week of June. It's all the way down here at the bottom. It's a green month or green week. 26, 27, 28, 29, 30. Let's just take a quick peek, shall we? And see what's popping up. By the way, I like to rank them by a couple of things. You can rank them by average net profit, and you can see what's really kicking. Priceline. Priceline's got a cluster. The next few days are going to be great Priceline clusters. All right, Priceline, Google, Amazon's coming back. Amazon, by the way, let me show you this. All right, I'm telling you guys, I could talk until midnight. I could. I'd be divorced, but I could. Take a look here. So let's go to, where do I want to go? Go back to Tom's Tools. Let's go to Darknet. Jay, did you see this? What I'm about to show everyone? Go to over here by Darknet Backtesters, click on Chart. And I'm going to show you some backtesting next week, folks. But type in AMZN. All right. Did I see something on Amazon? I sure did. Look, a buy signal was just a couple days ago on Amazon. This was late last week. Buy signal on Amazon, and it's actually starting to move higher. It's moving outside the 990 range. We get above that day we popped and dropped. We're back to the races again. Okay. Pretty cool stuff, huh, Jay? You know
yes,
that.
Sir.
I mean,
oh, yeah.
You've been around with me for a couple of years. You wouldn't be here if this wasn't cool stuff. So I'm just showing you, we're clustering things together. We got Money Calendar and Darknet saying this thing's looking pretty good. We've got let me just show you here. We've got a lot of stocks that are green. All right. Yeah, we got some doozies too down at the bottom. All right. That Dow, that's not the Dow Jones Industrial Average, that's Dow Chemical. NAV. All right, any of you to know, I've been bearish NAV. I was bearish NAV. I actually got out of, I'm no longer bearish NAV. It's still going down. We had that one on a couple weeks ago. That was right here from Money Calendar. But you can see here, some of these are they look like cyclical stocks. All right, but then look at all the green we got on the screen. And the other thing I want to mention about green is that when you see green like this means that, look here, 90% on Monday are bullish, 96% on Tuesday, 97 on Wednesday, 97 on Thursday, 94 on Friday. This also tells me that the overall market, the most popular stocks, the overall market want to move higher based on what's happened in the last 10 years, right? And then we all know going into the 4th of July that holiday trades are primarily bullish too. So this will spill in to the following week too. So again, what's our homework? Follow the case studies we've been talking about. Go ahead and start looking at money calendar trades for the week. I gave some of you a few of them to chew on. And then, of course, for those of you that are new with us, to get access to Money Counter, to get access to Darknet, to get access to everything I showed you, we've got a 7-day free full trial at tomsoptiontools.com. All right. If you haven't done this, click on tomsoptiontools.com. What you're going to do is it's going to actually I'm sorry, you're going to go to the top here. It says 7-day free trial sign up. Click on that and you pick a level. The first level is just your option trader. The second level is the contrarian trader. The third level is our complete trader, which includes the money counter. Level 4 is something we do during the day. All right, it's real time. We do live webinars Monday through Thursday during the market. And I'm on there at least once a week, but my team is on there as well. We actually have professional day trader as one of them that's on here too. But just continuing to sharpen your sword on risk management and rules-based trading. That is full. Sometime later in the year, we will actually open that up. I tell you what, I've got something that I'm going to be teaching next week. And some of you, we will give you access to the professional level trader piece. I'll talk about that next week. But if you want a free trial to any of these, just click on Start Your Free Trial. I would say I said this on week 1, but I'll say it again. If you're, trying to decide, is Option Trader for me, is the one with Darknet for me, is the one with everything, including Money Counter for me, and you're not sure, take the big one, take the free trial. And if you feel like it's too much for you, then make sure you let us know you want to downgrade to do a different package before the free trial's up. And then you'll also get the special pricing that we have going on this month with these packages as well. Make sure you click I agree on the terms of service. Enter your information here. This is, we use PayPal. They're a third-party system that we use. That way we do not have or store any of your credit card information. I don't want it. All right. We use PayPal to handle that. They're also one of the most secure on the planet. I've never had an issue with PayPal and security breaches. You'll also enter and create a username and password. When you do this and you go to PayPal, you're going to have two options. If you have a PayPal account, you'll click on the PayPal account to continue. If you do not have a PayPal account, or if you want to pay with a credit card and not your PayPal account, then you click on right below the connect. It'll say log in as guest. When you click log in as guest, then you can enter your credit card information. For some reason, it seems to be confusing, and I know why. PayPal does this. They always make that little login and guest really small where you can't see it because they want you to be a user. I don't care if you're a user of PayPal or not. All right, I'm just showing you the different ways that we can do that. All right, obviously make sure you enter this image in so we know you're not a robot. Click submit, and you just follow the directions, and immediately upon clicking on that free trial, you'll pay nothing to begin. If you stay with it, then you'll get the low discounted rate. But immediately upon clicking on that, once it says successful, within 60 seconds, refresh, log in, use your username and password, and you're off and running. All right. Next week, what I'm going to be doing is I am going to be reviewing weeks 1 through 3 and the homework. We're going to continue case studies with calls, puts, spreads using Darknet and Money Counter. And then I'm going to get into something really cool, which is if you think you've seen some cool stuff now, wait till you see what I'm going to show you next week. I'm going to talk about how to become a system master using what I call rules-based trading methods, or RBT. RBT shows you how you create your own systems. I'm going to show you how I create systems, how I back test them, and then how to trade them going forward. So we're going to utilize any of you that remember George Fontenelle's, my trading partner. He used to have a strategy that he used all the time. It's called the 1030 system, the 1030 moving average. What I'm going to do is, the biggest hurdle to that was what stocks to use it on. I'm going to show you the 1030, and I'm going to show you the best stocks to use it on, and then I'm going to show you how we actually made it better and much more. So that's what our plans are for next Wednesday night. You do not want to miss next week. It is going to be very, very cool. Plus, I'm going to show you how some of you in the room can gain access to our real-time traders room, and that's just scratching the surface. All right, Jay, any final questions that you see before we wrap it up tonight?
Sure. If you just want to reiterate again what the power meter is.
Okay, so the power meter is, and you know what? Let me back up and show you real quick. So the power meter is, if I go to Money Calendar, let's just grab a day. Let's grab the 30th, And let's look at what we have happening up here at the top. So UAA, Baidu. Let's take a look at two. Let's look at Celgene first. All right. So Celgene, if you look at Celgene, you actually go into Celgene. You look here. Power meter just means that the pattern's getting better and better and better each year. So last year, the most recent years on average are better than the first year. On average, this pattern is getting stronger. When you have one that has a weak pattern, if we go back to view day and we go back to, is it Wynn? Let's look at Wynn Resorts. See that pattern? Jay, it's clear to me that this pattern is actually getting weaker, isn't it? You know, if we drew like a trend line on these years where the profits came in, obviously back in 2008, we had $13.33, and over here we only had $6.44. But you can see how it's kind of the patterns is degrading itself. All right, so I like the power meter to be a +1 means you have that it's going into the pattern, and even higher it just shows you even a stronger pattern. But I look for +1s or more. All it does is it just separates it out a little bit more than if I have 10 trades, it might separate it down to 3 or 4.
I also like to look at it as it kind of like flushes out any anomalies. If you have that 1 year that's like a plus 14 points and everything else is +1, I mean, this will kind of flush that out and
Absolutely.
make sure you, yeah.
EWY. There's another one. You don't want to take that trade. Even though it's a 9 out of 10, look, this year was barely a winner, 1 penny. All right, this is data that we use, guys, 22 cents. But look at the last few years. Winner, loser, winner. It just, all of a sudden, it just degrades itself. I would rather take something like the ones we showed you earlier tonight. All right. Anything else?
That'll wrap it.
Awesome. Well, folks, I hope you enjoyed it tonight. I did too. I have a recording to you as soon as possible. Enjoy getting those case studies together. We'll come back again next week and see how they are doing. Until then, have a great week, and I'll see you back here same time, same day, same channel. Till then, have a good one. We'll talk to you soon. Good night.